Wall Street just couldn't pick a direction today. And honestly, that indecision is telling you more than any rally ever could. The Fed held rates steady, and instead of relief, the market responded with a collective shrug and a whole lot of confusion. Let's break it down. The S&P 500 finished essentially flat, down just 0.04%, closing at 7,135. The Nasdaq barely squeaked out a green day, up 0.04% to 24,673. But the Dow took it on the chin, down over 0.5%, shedding ground to close at 48,861. And here's where it gets spicy. The 10-year Treasury Yield jumped nearly 1.5% in a single session, climbing to 4.42. Now, why does that matter? Because yield spiking like that while the Fed stands pat tells you the bond market is nervous. It's saying, hey, maybe inflation isn't as tamed as everyone thinks. And the timing could not be more loaded. Today we got hit with a triple data drop. Core PCE, GDP growth, and personal income numbers, all landing on the same day. That is the inflation trifecta. The market was digesting all of that in real time. But here's the kicker. There's growing dissent inside the Fed itself. Reports are surfacing that policymakers are not on the same page. Some want to stay the course. Others are pushing back. When the people steering the ship start arguing about the map, investors get jittery. And you can see it in the price action. The old economy, heavyweight Dow names got sold off while tech barely held on. Speaking of tech, Amazon's cloud division just posted 28% revenue growth, crushing estimates. Oz now makes up over 1/5 of Amazon's total revenue. That's the kind of number that keeps the Nasdaq from falling off a cliff on a day like today. Cloud is still the backbone of this market. Meanwhile, crude oil is surging. President Trump is in active talks about a prolonged blockade of Iran, pushing Tehran to cut a deal. Think about it. Oil prices climbing plus sticky inflation data plus a divided Fed. That is a recipe for volatility. And yet, the sentiment gauge sits at roughly 64 out of 100. That's greed territory. Investors are still leaning bullish even as warning signs flash. That disconnect between confidence and fundamentals, that's exactly the kind of thing that precedes sharp moves. So, what's the bottom line? This market is walking a tightrope between resilient tech earnings and a bond market that's starting to scream. The next few sessions will tell us which force wins. If you want to stay ahead of every twist and turn, hit that subscribe button right now.